Welcome to SMBConnect Spotlight. Spotlight is a platform for leaders to share the knowledge. In this edition of Spotlight, I will discuss the funding of MSME businesses, what are various avenues available for them to look at funding and expanding their businesses. My name is Sandipan. I am the founder director of SMBConnect. We are one of the largest network of SMEs across India. SMBConnect focuses on supporting businesses with knowledge sessions and opportunities for networking. We have organized over 100 conferences and seminars across India in the last few years. Apart from interacting with business leaders, we have organized various webinars and panel discussions during this ongoing pandemic. All our online sessions are available for you at our YouTube channel. So please visit that and get a lot of information which may be required for your businesses. Apart from that, beginning of 2021, we have published an ebook called Game Plan 2021 Vision 2025. 25 well-known authors have contributed to creating this ebook, which you can access at SMBConnect website. In today's session, I have Shailesh Waghmare, founder director of Apohan Corporate Consultants Private Limited. Shailesh has over 20 years of experience in consulting businesses across different continents: India, Australia, UAE, Africa. He represents organizations. He has represented organizations in various forums and speakers, member of discussion panel, faculties, in workshop organized by CII, NSCI, ACMA, NSDC, etc. So welcome, Mr. Shailesh, and thank you very much for giving your time. I hope we will have a good discussion.
Thank you for the opportunity given to me by SMBConnect, and I hope this will be a very interactive session for all the viewers who will be watching this in the future.
Definitely, because funding is one subject which most of the SMEs get excited. Everybody was keen to know how to go and get some fund, and with the startup culture, which multi-million or multi-billionaire valuation, people are very much this funding has become talk of the town. So people start business just not to do something, but to get the funding part.
Yes, it's true. It's true because funding is the bloodstream for any of the business in current economic scenario, because earlier days it was limited market and there is not much expenses people needs to do particularly for marketing your services or products. But currently the major cost which most of the SMBs are incurring is about the marketing and promoting their product, which was not in the past.
So, Shailesh, let me ask you one thing. You are consulting and you are talking to a lot of business owners. Uh, People are looking for funding. So, do you have to market yourself, or
Yes.
people come to you and you?
So when we look at the any of the investor, when you look at the investability of the organization as such. When I mean investability, it is like that whether the organization is investable or not. That means whether that organization will give return in the future or not. What is their current scenario, current situation as such, how they are progressing in the past, and is there any other reason than the finances only for the growth of the organization. So only finance, if only finance is the problem for the growth or expansion of the organization, then any investor will be happily investing into the organization. But if there are other problems than the finances for growth of the organization or for expansion of the organization, then there will be little pause any investor will take, and will have a detailed due diligence leading up to the forensic due diligence also. Now, problem with SMBs is that they don't have their document investment ready or transaction ready. So any SMB feels that if they are filing their compliances regularly or on time, and if they are making up their balance sheet regularly every year within time and all, they feel that those are only the documents which investor will look at. But no, investor always look at all the functions of the business, be it marketing, be it operations, be it sales, be it manufacturing, and any other aspects such as. And also investor will be happy to know if there are any transactions which are not recorded in the book. Being a private limited organization, sometimes that happen that some of the transactions are not recorded into the books. So, but if we can tell them in advance to the investor, then they can take corrective steps according to that. So, the major thing which investors look at for the organization investment is that, broadly, if you look at that way, they will always see that if only finance is the problem for the organization growth, then they will be happily put in money. But if there are any other issues, then they will take little time to take a decision.
Yes, Shailesh, let me understand for an SME and what I have my understanding and my meeting with a lot of people is
Hmm.
a SME business owner is very happy to look
Hmm.
for a debt based funding vis-a-vis a
Yeah.
equity based funding. So
Yes.
how do you what do you suggest which was the better for an organization when a person looks for an investment, look for funding for his organization to grow his organization? It may be working capital, it can be
Hmm.
expansion, it can be global export, looking for an export. The first
Yes.
priority for any investment is go to a bank, go to a finance institute, get some debt.
Yes.
A typical, and then as you're talking about a typical business owner, which are businesses, which is a small businesses in India, are a family-owned businesses, and they feel it is their own organization, and they don't like to part away funds for equity.
Yes.
So you please suggest which is the way should a business should look at fund, which are the either of this, or is any other way he should look for fund his expansion, growth, or working capital needs.
Say, if you look at that way, for a business to get a debt is easier always because debt is secured. Yes, and if they have something to mortgage or something to guarantee, then the transaction, or debt also, I will call it as transaction. So that
Mhm.
transaction can happen within a month's time because there are set norms, set rules, set guidelines, set formats which are needed for any debt approval or debt sanction. So most of the time businesses feel that it is easier for them to do that, and also it is cheaper also. When I mean cheaper is that because they don't need to shell out their equity. So today it may be 100 rupees, but in future that 100 rupees might be a 100,000 rupees. So if you look at that way, then it is cheaper. But again, if you look at some of the parameters which are very difficult, is that get means you for any of the debt funding, the businessman or the organization has to give the guarantee, and there is guaranteed return every time for the debt. That means what come whatever things or whatever is the situation, but that guaranteed return has to be given by the businessman. So there is monthly EMI. You cannot run away from that. 3 months you cannot pay the EMI, then your account will be a negative account. Second part, it is a fixed return. That means every month you have to repay that money. There is no waiver onto that. And guaranteed, fixed, and periodic return. These are the three aspects which are always linked to the debt funding. That means you have to return that money come what may. If you have taken 10 rupees, you have to pay back that 10 rupees with fixed return, that means interest, and in a particular period and time, and there is no waiver on it. But in contrast to this, for equity funding, the business has to give no guarantee. There is no guarantee the business has to give for the equity funding. There is no fixed return. There is no periodic return also. Once equity funding is done for a business, that means that investor is also part of the business. So your funding cost goes down like anything, and you have ease of doing business. The when I say ease of doing business is that you don't need to worry about monthly EMIs and other thing. And addition to this, if your investor is knowledgeable and from your own sector, then if there is a big order, then investor can say, man, you are needing 100 rupees, let me give you 200 rupees because I know this order you can deliver only with 200 rupees, not in 100 rupees. But in contrast to this, if you look at the bank, person go to the bank, they ask them for 100 rupees. Today, bank will take a year's time to decide on this, and after 1 year, they will tell them, in place of 100 rupees, I can give you only 50 rupees. And that too, now the 50 rupees, if the business is requiring 100 rupees, then there is no fun of getting 50 rupees. Just to give you a small layman example, in the local market, for a tea seller, if the milk cost is 50 rupees, 52 rupees a liter, then anyone is giving him 50 rupees will not solve his purpose because that person cannot buy a liter of milk and cannot make a tea. So same thing happened with the business. So as an advisor, we always advise the businesses that you don't look at what means equity you are selling out, but you always look at what is the requirement of business to get it to the fullest potential. So we should be very open in evaluating this computation. So if there is a requirement of 100 CR for the 100% operational strength of the business, then businessmen should get at least 100 CR, not less than that. So these are the three major points which I just give you the differentiation between these. There are nearly 27 differentiative points which differentiate debt from equity, and both has their pros and cons. So these are the 3 points. Again, if you look at that way, compliance requirement is high in the equity, whereas for debt there is no compliance required as such. When I say compliance requirement means, for equity, the person is putting up money into the business, so com company law compliance needs to be done, company secretary compliances needs to be done. So that is one part which is little bigger in the equity funding. Another aspect which is little prevalent in India is that if you look at the corruption. So when we go for a debt funding, so I am not blaming anyone, but that is the general perception and experience of most of the business. For getting a loan sanction, we have to do something. Yeah. But if you look at other aspect like in equity funding, it is the money of the investor and the business who is selling his equity, his own business. So there is no corruption. This is 100% transparent and clear transaction which is happening for equity funding. So these are the few things. And one more point which I would like to highlight is the eligibility. If you look for eligibility of loan, there are set rules, there are set guidelines, and the business has to fit in into that guideline. Then only that business can get the debt funding. But in contrast to debt funding, if you look at the equity funding, there is no eligibility criteria. It is always on the discretion of two parties because this is the transaction between two private parties, and based on their own notions and knowledge, they can take a call. Just to give you an example, even if the business has defaulted in paying the debt or something, and even if the account is NPA, non-performing asset as per bank, but still that business can get equity funding if that business has good potential, good merit, and good future prospects in the market.
Okay, so Shailesh, let me announce this. You have been very vocal about equity funding. So let me understand and
Yeah.
ask you, what is the current trend in the equity funding market, and with a lot of businesses which is going on in distress because of the lockdown, there is already a decline in growth. So can you tell me,
Hmm.
based on the current situation, what is the trends in the equity funding in today's environment?
So if you look at the trend in the equity funding market, the trends are very encouraging as on date also, even if we are feeling that market is negative, because if you look at the another perspective, this is the very good time for the investor to get a good favorable valuation. Yes, and this is the time wherein business are in distress and banks will not fund them because defaults are already happened and debt funding happen as per the rules and regulations. So this is the very good time wherein business should go for equity funding. Market is growing up. Market is going up. If you look at the first in 2020 also, if you come look at the global scenario and all, the equity funding volume has gone up. Equity funding volume has gone up. It has not came down. But yes, during this pandemic particularly, SMB businesses are very little reluctant because they are feeling that their valuation may come down because of pandemic, because their turnover has came down, or the top line has came down, or profitability has been shrink. But that is also not correct in each and every aspect, because when we do a valuation, so equity funding is a game of valuation. So how strongly and how logically we can justify our expectations of valuation, then it is always a good time also for equity investment.
So Sailesh, I've asked few questions. I've asked a couple of my members to share some questions. So I thought I'll let me ask
Yes.
it and get some feedback about how it.
Yeah.
What should be your feedback, be it as an investor point of view or from a organization point of view. Now, this is an organization which is in travel industry,
Yes.
hardcore ticketing, predominantly ticketing and related services. They have their own
Yes.
online portal, have a brand which has
Hmm.
been there, not able to
Hmm.
expand much. Last
Hmm.
12 years, they had a turnover of close to around 15 CR.
Yes.
So when to 2019, when they closed, it was around 15 CR and above is what they have closed. But
Yes.
with the lockdown, business has gone to next to zero. They
Hmm.
have done little bit, very difficult to sustain.
Hmm.
And I'm talking from an investor's point of view. So they have the investor is asking, should he invest in an organization which has already taken a debt of close to 30 or 25 to 30 lakhs, has done overbooking earlier, and
Hmm.
have to return and refund some money, and is
Hmm.
for last 1 year they have not done much of businesses and don't see much business coming up
Hmm.
in next 6 months also. What should be advice to an investor for to invest in an organization like this or not?
Say, if you look at the last 1 year deep in the turnover or the on the efficiency of the organization, that is the global impact which has happened to nearly all the organization, be it a multinational or be it a local businesses. So that is a universal impact. So before answering this question, I will just give you a small example. So if say take an example of say travel and tourism. So there are companies which are listed in travel and tourism business. So maybe any of the company which you take, maybe Club Mahindra or something like that. Okay, same industry. So they are doing good. Their shares are still trading and other thing is happening. Look at their valuation, what they are gaining. They are not come down significantly. Now, if you compare the business risks for both of them are same. If ticketing is not happening for this company, same thing is happening for them also. If there is restriction, it is same for both the organization. If there is any recession in the market, it will be same for both the organization. But still, that listed company is getting investment, and there is a reason, because there is the factor which you call as the perceived risk or perception of the risk. As there are no documentary evidence or there are no published data for the small businesses, it is very tough for that business to get the positive perception in the market. But For the listed company or the large corporate, they have their department of transaction, department of merger and acquisition. So that department's work is this only. Entire year they will do this work and look for investor. So if anybody is ready to invest in the large corporate into that sector or listed company into that sector, then they should also invest into the small companies also. The reason for is that if you look at the return on investment and the factor or the multiple factor, if you look at that way, the large corporates multiple factor is anything ranging between 35, 40 to 90x. If you look at that way, vis-a-vis in a small companies, you can get that multiple in the range of 5 to 10. So your money will multiply quickly. If it is taking 10 years there to multiply your money, you can multiply your money here in 2 years also. Now come to the original question, whether investors should invest into this company or not. If, as we say, fundamentals are strong for the business, then like stock market, if fundamentals are strong, people keep investing into those stocks. Same thing happen with the SMBs also. If fundamentals is strong, fundamental means if the promoters are good, they have very good track record and history in the past. They have never defaulted with any of the debtor or creditor in the past, and they have good intention of doing the business. There is no succession issue with the business, and these are the internal factors for the business. And if you look at the external factors, there is good potential in the future down the line, 3 years, 5 years, 10 years, and market will revive. Then the investor should invest into such business. But with the caveat which we will always suggest is that investors should do a thorough due diligence of the business. They should carry out thorough due diligence of the business. They should not rely on the documents which are submitted by them, and there could be a due diligence cost involved, but that will be always safer to make the investment into small businesses. Just to add on to this point, last point I would add on to this is that 3 weeks back there was an article from Mr. Jhunjhunwala, wherein he has clearly listed out that his stocks which he has invested in the private equity are giving more returns than the stocks which are invested in the listed company. So investors like Jhunjhunwala, who were always rallying on the listed stocks, are also coming up to the SMBs now because they realize multiple factors are less here. They can have the clarity on the organization. They get to know what is happening into the business. So it is a good time to invest into SMBs.
Great. So let me now ask it follow. So for what should an investor look at to invest, or who should an organization? So what are 3 key factors an investor should look for an organization to invest his money in that, and what kind of stake he should look at? Should he look at a minimum stake, or should he look at a stake which should give him some option to have a financial details of the organization coming in?
Say, so if you look at that way, any investor which is looking to invest into a business, so for SMBs, they should always get a stake which is not less than 26%, because it the businesses are family run businesses or individual run businesses. So any decision which is not important for taking the board decision. So if the investor doesn't have a 26% stake into the business, then they will not have that saying power into that business particularly. So that is the one aspect. Minimum for 26% they should look at. And if any of the SMB which is doing good and they already have some investor into that which are a minority investor also, but still if they are taken good care, then in that case investor may invest less than 26%. But as a thumb rule, they should always look at minimum 26% of the investment. This is the one thing. And if the investor is a strategic investor who want to take control of the business and add value into the day-to-day operations, in that case, the investor should take 51% stake, not less than that. because there are some of the decisions which require 51% approval, some decisions require 76% approval, some decisions require 91% approval. So there is always a game between 24, 25, 26% stake. Differential valuation happens between 49, 50, 51. The same differential works out, and same way 89, 90, and 91. So this is the thing. And the three aspects which I will always suggest to the investor while going into SMB's investment is that first is about their track record in the past, and not importantly, track record means the compliance satisfaction. No track record as the performance of the organization. Secondly, whether they have the technical competence of their products and services. Any SMB who doesn't have technical competence on their own, then investors should not take a risk on investing into that business. These are the two aspects. And third aspect is their financial integrity. There should not be any default wherein any of the associated party has been cheated or fooled out. So these are the three major aspects which investor always look in before investing.
So my next question is about from the funders, from an SME point of view, who's looking for some kind of funding. The
Yes.
background is this is a 5 years old organization which has converted from a partnership or a proprietorship to a private limited in a just 5 months back. The business
Yes.
remains same. The company name has changed to a new entity.
Yes.
They are doing similar kind of business. They added some more people to resources because this is a hardcore, it's a resource-oriented business of education and preparation and training of students and higher schools and corporate training and all.
Yes.
Have done some business now, and they're looking for, and it's just around 4 to 5 months in the business, but looking to expand, go from a regional to a national level, looking for some funds. What should be your advice to an organization like this?
So if means and they are looking for the equity investment.
Yes.
Yeah, and the organization is means a new entity is 5 months old only,
Yes.
but promoter has experience of many years into the same
5 years.
business.
5 years, different name, different entity.
Yeah. Okay. So in that case, because say education sector, if it is a edtech organization or education technology organization, then there are a lot of investors who are willing and ready to invest into that. So there are two ways wherein they can look at. The first is that if they want to look at a startup funding, then they should approach the startup funds for that. So there are multiple organizations, multiple groups which are doing cohorts and other things, or even accelerator programs for getting the equity investment to the startup organization. So that is one way they can look at that. Secondly, if they don't want to go into that startup funding mechanism, because the difficulty with startup funding is that the investor has their own guidelines, their own term sheet already defined, and they don't give opportunity for a startup to modify any into that. Yes, because invest they have their own team of lawyers, team of chartered accountant, team of company secretaries and all. So they have their own set of rules and they work accordingly. Now, as they already have 5 years experience, even though the organization is 5 months old, there may not be the track record or track history on this particular organization's name. So, but as a promoter, they are running the same business, so their legacy is more. So they can go for the private equity funding, and they can explore the institutional or strategic investors who are ready. And if that organization is 5 year old, then there might be a good chances that some of the organization is trying to enter into the geographies wherein they are operating, then they can be a very good bet for acquisition at a very good valuation. The investor or the acquirer will pay them for the connect with the students or the market connect, and they can get a very good valuation into that. This is the second strategy. Third strategy which they can look at it if they want to do it on their own and want to take efforts again and make their own brand to be bigger, then they should look at the institutional investor who can invest into them looking at their prospects and the back track record.
Great. So thanks, Shailesh. I think before we wind up, let me ask one last question because
Yeah.
people, the SME businesses are looking for funding. Let me understand from you, what are the funding opportunities that businesses usually misses? They don't even look at this kind of funding opportunities and then always look for either debt or family or friends or equity, anything which is missed out by them to the large extent.
Say currently, if you look at that way, out of total SMEs, the if you look at the institutional funding, when I say funding, it means debt or equity, whatever way of funding, is less than 6%. It's very less. 100 means out of 100 only 6 are institutionally funded, and so that is the penetration of funding into SMBs. So for SMBs, they always look at debt funding and they misses on the equity funding. So there is no other option for a growth for SMBs than to have a equity funding or the private equity into their business. So they should not miss onto this, and this is missed by so many organizations because every time businessman feels that why to share my fortune with anyone else. But I will again give you a layman's example. Rather than holding 100% stake in a 100 crore company, I should be happy to hold 75% stake or a 50% stake in a 1000 crore company, because I will also get the hands to work with me. I will also get a friend who can understand and listen to my pains and sometimes can give solutions also rather than me running alone.
Thanks, Arish. Thank you very much. I think we had a good session, and I'm sure the people who will listen to it and will review it will find it very interactive and very interesting and knowledgeable. And if you have any questions from them, we will come. We will forward it to you and hope you to respond back to them. So thank you, Shailesh.
Yes,
Thanks very much.
thank you. Thanks a lot. I am always available for any type of suggestions, for particularly for SMBs, because I have spent nearly 15 years dealing with SMBs, so I know what are the pains and problems and what are difficulties with them. We'll be happy to help them any moment. And thank you, Sandipan, for this opportunity. And I wish all the best to SMB Connect. And you are doing wonderful work for the SMBs in India. Thank you.
Thank you. Thank you for watching SMB Connect. If you need to ask any questions on funding or if you need any funds for your businesses, please email us to info@smbconnect.in and we will have this answered by Shailesh for you. Do watch and subscribe our videos on our YouTube channel. There are loads of information for businesses. And also follow us on social media handles of Facebook, LinkedIn, Twitter for updates on SME ecosystem. You can also register your business at localandvocal.online, which is currently free, where we promote your business globally. Once again, thank you very much for watching. Do join us for our next session on Spotlight soon.